Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 13th, 2026, and we're diving into JPMorgan Chase's fourth quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. JPMorgan Chase is a leading global financial services firm, and their latest earnings report provides a comprehensive look at their performance in the final quarter of 2025.
Revenue and profitability overview. Let's start with the top line. JPMorgan Chase reported a total net revenue of $45.8 billion for Q4 2025. However, net income saw a decline. John, can you elaborate on these figures?
Absolutely. The total net revenue of $45.8 billion represents a 7% increase year over year, which is quite robust. However, net income declined by 7% to $13.0 billion, primarily due to increased provisions for credit losses and a decrease in investment banking fees. The adjusted earnings per share came in at $4.63, slightly below the forecasted $5.01.
Operational efficiencies and future outlook. Despite the challenges, JPMorgan Chase has managed to maintain operational efficiencies. What are the key factors contributing to this, John?
JPMorgan Chase's non-interest expenses were well managed at $23.98 billion, reflecting their focus on cost control. The provision for credit losses increased significantly to $4.66 billion, which impacted net income. However, the firm continues to strengthen its balance sheet, with a book value per share of $126.99 and a tangible book value per share of $1,756, indicating strong capital management.
Segment performance and strategic initiatives. JPMorgan Chase's business segments have shown varied performance. Can you break down the segment results for us?
Certainly. The Consumer and Community Banking segment generated $19.4 billion in revenue, maintaining stability. The Commercial and Investment Bank also reported $19.4 billion, driven by strong trading results. Asset and Wealth Management saw a 13% increase in revenue to $6.5 billion. However, the corporate segment experienced a significant decline in revenue by 26% year over year, largely due to lower investment securities gains.
CEO-CFO insights and strategic direction. What insights can we gather from the leadership's commentary on this earnings report?
While specific statements from the CEO or CFO were not available, the overall strategic direction remains focused on cost management and maintaining a strong capital position. The firm is cautiously optimistic about the future, given the current economic environment and market conditions.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 5 but the actual EPS came in at $4.63. What does this mean for JPMorgan Chase?
This represents a miss of 38 cents per share against the forecast. The miss can be attributed to higher than expected provisions for credit losses and a challenging investment banking environment. Despite this, the firm remains fundamentally strong, and the market will be watching how they navigate these challenges moving forward.
Key takeaways. In summary, JPMorgan Chase delivered solid revenue growth but faced challenges with net income and EPS. The firm continues to focus on operational efficiencies and strategic initiatives. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing JPMorgan Chase's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on JPMorgan Chase's performance in the comments below.